And we live. Good morning, good morning, good morning. I'm back again. Still trying to get everything set up. While I'm sipping me some tea right over here. Okay, I had this computer over here. I had it on a different ticker. Hope everybody having a blessed day. Thank you for joining. Hit the like button, subscribe to the channel. Gotta erase a couple things over here. Okay. Still trying to manage. Da, 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 da. Okay. Cut me off. Oh no. I'm still trying to eat my breakfast while I'm trying to get all this set up. Got to be the tech guy. But I'm not the tech guy. I have to learn all this. Let's see. go. I think I got it all set up pretty good. How's it going? How's it going? How's it going? What's going down? Yeah. See what these trades hitting about today. See what I can get in. See what's going on with this. It's still moving. Can't really do too much with this computer. I gotta get this checked out. Why it's moving so slow over here. I am using the OBS. I think that's what it's called, OBS platform for streaming. And it's making my computer move a whole lot slower. Okay. I do have other computer over here. I got a screen right here. So this is basically like a test run I'm doing. You know, try to learn how to figure this out. Because I will be going full throttle after the first. Because as we know, the New Year's is coming up, so these next 2 days are really kind of going to be slow. So I'm just basically trying to get myself set up because I'm not a tech guy. But I see I got a few things I need to bug out as far as this live streaming computer right here. And it's real slow and I can't really teach like I want to teach on the live stream because of this OBS. And I'm just now trying to figure this out. So this is basically just a test. And I'm trying to trade at the same time. So it's not easy. So just bear with me. But after the first, we should be good, ready to go. In the meantime, hit the like button, subscribe to the channel. Hope you got your plans rolling out for next year. We should be pretty good going to the upside. All this Fed price hiking is seem to be over with, so hopefully that's out the way and we can start to rise, come back up as a nation, as an economy. So that's all I got to say about that. Feel free to make a comment in the comment section. Well, I gotta figure out how to pull that up over here, but make a comment, I'll answer it later on. Tell me what you're doing. Subscribe to me and I subscribe to you. That's how we do it over here. If you have a YouTube channel. Thank you for joining the show. I am a day trader, so this is new to me. So, but my plans are to start live streaming. So it's not as easy as what I thought it was going to be, but hey, we're going to make it happen over here. But in the meantime, I'm currently in 4 swing trades, which I caught that dip yesterday before the market closed, which is TQQ, 2 separate positions in TQQ, and I picked up AMD calls yesterday. So, and well, three positions, 2 TQQs and 1 AMD, all calls. I caught that drop yesterday, and the expiration dates on these are until February. So, and they're already up like 10%, 13%, 15%, well 22%, 10%, and 15%. The AMD is up 15%, and 1 TQQ is up 22%, and the other TQQ is up 10%. But these are not day trades. I'm just gonna like swing trade these because I'm looking for the market to really hit the ground running come January and February. So I will be holding these for a couple of weeks But if they hit 100%, which is my target profit, 100%. If they hit 100%, I will be taking profits because I do preach taking profits over here. So that's what's going on with that. I would encourage y'all to catch my other videos, my lives, my gym exercise lives. I will be filming that, just putting down a lot of content on this channel. I like it. I think it's kind of fun. So if you're just now joining, this is the Stock Sniper live and direct. And if you're catching this on the replay, please do me a favor and hit the like button and subscribe to the channel. I think I'm gonna start doing reaction videos too, like reaction to the stock market, reaction to different stock streamers, just different reaction videos. So be on the lookout for that. It looks like we're moving kind of sideways to start the day. Not much volume. I want to catch one of these dumps, because I know a lot of people are selling, taking profits for tax purposes and different reasons. I know that, and it's been the last 3 or 4 days we'll be getting those large dumps. So I want to catch another one. Not on a swing trade though, on a day trade. I'm trying to erase my other scheduled lives. I'm trying to figure out how to do that. Just hold on a second. What's that?
And so it sort of augurs well for that industrial piece of the economy that hasn't really seen as many tailwinds this year perform well. I think the scenario where bonds rally but equities do not would be a scenario where the Fed cuts, maybe 6 plus.
So let's see what they're talking about a little bit on Bloomberg.
24, and perhaps a few 50 basis point cuts would be involved, because we could see a recession, and maybe that recession.
Oh, they talking recession. Here we go.
It's a little deeper, but we also have to remember.
Have you noticed that they always talking about a recession?
For the last 18 months and haven't happened, and oftentimes recessions come out of left field, and so I'm not ready to the towel on recession predictions this coming year, but we have to be careful.
Do we need to see the labor market here in the United States, Aaron, really break down to some extent to get a full-blown recession?
Right. See, that's what I be talking about. They talking about recession, but it's still jobs. It's not that many people on unemployment. See, in order for it to be a full recession, in my opinion, it got to be job cuts, unemployment going shoot through the roof. Then it'll be, that's the definition of a recession.
So it's usually the last leg to break when you look at economic data through previous cycles prior to a recession. We're seeing some evidence of softening, but certainly
They always trying to scare.
The labor participation rate has been going up nicely and is back towards essentially where it was pre-COVID. And yes, jobless claims, and you look at the running trend line, have been elevated on the margin, but the employment data still remains relatively strong. And so I do think we would need to see that break, and we'd probably have to see something well above a 4.5% type rate for us to start thinking like that.
Right. See, that's what I'm talking about. You heard what he just said? He said for it to be a full recession, people will have to get laid off. And that's not really happening. There's jobs out there. People are still spending money.
An interesting week for us with all these conversations, and I feel like there's a lot of different scenarios that everybody's kind of planning for in 2024 that we just don't quite know how it plays out. That kind of certainty is not quite there. Having said that, is there any conviction that you can put behind certain investment strategies right now? And I know we've talked a lot long term, I get it, but right now you're thinking about putting new money to work. Where do you put it?
Yeah, I would say that the certainty is uncertainty, and I know that's sort of trite, but we still go back to the building blocks of portfolio management, of advising our clients about their present and future needs around liquidity, and really their own personal risk tolerance, as well as their ability to financially.
The market is moving sideways, by the way. Currently watching the SPY.
All these sort of things together, and we build portfolios and wealth plans around those dynamics. And I would just say, that hasn't changed. But as it relates to specific portfolio opportunities, we continue to believe that equities remain a cornerstone of most client portfolios, particularly clients where we're really investing for 5, 10, 15, 20 plus years. And we're thinking, too, that if we're going to see rate cuts in 2024, which we do anticipate, and we see the long-term inflation expectations at about 2.2%, 10-year break-evens on Bloomberg this morning, it's still providing bondholders and treasuries, and let's say the 10-year treasury, and therefore the overall ag, an opportunity to own fixed income here. The yield to maturity of the Bloomberg Aggregate Bond Index is about 4.5%. A year and a half ago, we had a 2 handle on it. And so think about that 60-40 portfolio, and you're trying to impute what future long-term return expectations are for major asset classes. You can now lift up fixed income even after the rally we've seen since October.
Recap: I currently got 3 positions open on the TQQ. I got 2 different positions on the TQQ. Both are calls, and I got 1 on the AMD, which is all these are contracts. On the AMD, I got 1 position open.
High yields in the sweet spot. Investment grade should be part of the narrative. For you, we were talking about Tech IG or Magnificent 7 on IG. What portion is IG?
See, that's another thing I've been seeing since like the end of the year. During the day is not really that many opportunities there. Like if you see right now, it's not really moving. But there are good opportunities on swing trades. Like hold 2-3 days, hold a week, hold the 2 weeks, because we can see, if you can see that the market is steady going up. Let me see if this can work so I can show you.
Investment grade corporates, of course, they'll go down less than high yield, but you have to keep that in mind. And certainly, owning Meta.
See, the market is steady going up. I just think if you'd have caught a call contract right down here at these lows where they dumped those, how many days ago was that? 1, 2, 3, 4. Like 5 days ago, this big dump. Just think if you'd have caught this big dump on a 2 or 3 week contract.
Waterfalling
and rolled it up and held it for a week.
3 years. I think it's about $1.3 trillion.
Look,
Most of
another
it's
dump.
2025 and 26, so
So we're steady going up, but there are these dumps that happens during the day. Profit taking, the big boys taking profits. So there are opportunities, and that's what I'm kind of waiting on. Another dump.
Of Clear Harbor Asset Management with these calls. Well, there you go. 6 rate cuts.
So that's my plan right now.
Something to quake about or not?
Yeah, it sounds like he's not
As we
necessarily quaking, but
approach all-time highs on the SPY, so
S&P not at a record, Dow's at another new
that's
record.
my plan right now.
We'll get there.
Is
Tomorrow
if I can
we
catch a
have
day
one
trade,
session,
cool.
to make
But
that happen. And tomorrow, of course, we're
I
going to
see how the market is moving. The day trades are not really there, so it's really there on the swing trades. And you just catch a dump and hold it and ride and just hold it. Because I'm expecting something good come the first of the year. I'm expecting us to hit that 500 on the SPY. I'm expecting that, and then I'm expecting probably a pullback. But I know that we gonna hit 500. So we gonna hit that 500 on the SPY or the 480. Not the 500. I'm gonna say the 480. We gonna hit the 480, and we gonna hit those all-time highs. And that's my target.
This industry, and as our revenues start to get in the billions of dollars, yeah, I think that you'll see a wave of companies go public, whether we will or not. There's a big responsibility when you're a public company, and I tell people we're a public company already. The scrutiny that you're under in running a sports team is, I think, much higher than a public company.
Oh boy, this tea is good.
We'd be prepared to do it, just the market would have to be right. We'd have to emotionally.
I don't drink that much tea, but
do something like that, but I think.
this tea is really, really good.
The 3, 4, 5 best-in-class organizations that, if the time was there, sure.
If you're just now joining, it's the Stock Sniper. Hit the like button, subscribe to the channel.
thanks. Let's do it.
Currently 30 minutes in the market.
The hardest thing in life, I've often said, is to
We're
be
just
happy.
watching, no
You're a
volume,
very happy person.
slow motion. Nothing's really going on.
So you could be super happy 1 minute, and then something happens. So it's just.
But I am currently in 3
The
trades,
young woman that's watching
all
this
calls,
wants to be the next Diane Von Furstenberg.
2 TQQs,
I think the most
1
important
AMD.
thing in life is the relationship.
These are swing trades. So
Once you have a good relationship with yourself, any other relationship is a plus and a minus. And the second advantage
on AMD, I'm up 21%. TQQ, I'm up 13%. QQQ, 9%.
But the more you could be you, the happier.
These are swings, which my plan is to hold to after January 1st or sell at 100% profit, whichever comes first. That's my plan.
We have a fundamental reassessment of everybody's capacity within OPEC. Should we talk about $95 and $100 oil again? Not for a while.
And as far as my day trading strategy, I'm looking for a sell-off, like on the put side, like we've been having for the past 4 or 5 days. The big boys taking profits for the end of the year. So, and we've been having that the past 3 or 4
I
days.
think that it's hard to put your head around any narrative.
I'm
Let's just
waiting
be
on
honest.
that.
We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
See on my 3 trades that I'm currently in right now, I caught them right here. This dip. I missed the put, so right up in here,
First half hour of trading equities are slightly higher this morning. Yields
around the $4.75.30 area.
On the commodities front, WTI crude oil is lower at just
That's when I
above
bought
$73 a barrel.
these
Gold
contracts.
A little bit lower, let's call it $2,075.
And I'm just riding them up as we are on the uptrend from that point.
$600 per token. Coming up, we're going to chat with Bloomberg News Editor-in-Chief Emeritus Matt Winkler on America's top stock picker. Plus, we're going to get the latest reporting on the Middle East. We have some economic data coming out here, Kaylee, on the housing market. Pending home sales on a month-to-month basis were flat. The consensus was for a gain of 0.9%. Still better than last month, which was at negative 1.5%. So on an annualized basis,
We had housing data come out this morning.
pending home sales versus last period, which was a revised negative 6.3%. Let's break that down a little bit. Simone Foxman joins us here in our studio, Bloomberg News. Simone, in the housing market, nobody's selling their home, so I'm not sure what's happening out there because, why get out of a 3 or 4% mortgage rate and then have to go into something with a 6 handle?
That's been periodic. That's been the story of all of this year, and that's been why some of the home builders have done so well, why they're near record levels in many of those stocks. But you look at this data coming out this morning, pending home sales are seen as 2 months ahead or so of existing home sales. So it is sort of surprising here that we're not seeing
Look,
an
looks like
increase
AMD moving a
in
little bit. Let me switch right here from the
considering what's happened
SPY is
to
boring
mortgage
today.
rates over the past couple weeks. They hit a
Switch
high,
over to AMD.
Now they're back down in late October, and now they're back down under 7%. 6.67% was the Freddie Mac 30-year mortgage rate. That's the lowest since May 25th. But of course, as you mentioned, Paul, it's been an inventory issue. That's why we've seen U.S. new home sales decline. And what's clear is, that is still the case.
Yeah, okay, we got action on AMD.
There just isn't enough stuff.
Switch, okay, AMD moving.
that can sell.
All right.
Well, I wonder how much of it too, Simone, is this idea that sure, mortgage rates are lower than they were, say, a month or two ago.
So I'm sitting over here looking at my P&L on my AMD,
So why would we buy now? Why not just wait another
and I see it went
6
from
months?
20% to 34%. Like, oh, let me switch over and see what AMD doing. Oh, AMD is running.
Wait for the Fed to continue cutting. You're going to see higher prices if that is the case. I think that's the overall.
Let me see what these contracts look like right now.
Buying these new homes, and we could see a run up in new home sales sooner than the existing home sales because D.R. Horton, Lennar are offering these mortgage buy downs, and I should point out that both those names up 70.7% this year, 65%. You look at even luxury builders like Toll Brothers up over 100%, Pulte Group also up over 100%. All of those names trading near records.
Well, I don't know about the other folks in the, baby boomer or whomever. I sold all my homes plural over the last several years. So if anybody needed inventory, I did my part. That's really, that's the issue. I mean, even in my neighborhoods today, something goes on the market, and boy, it is snatched up
Instantly.
assuming it's reasonably priced. There's a couple homes that have been on the market for over a year, and you look at the price and you say, what are you thinking? I mean, in this crazy market, but I think if you price it, I think even reasonably for this market, which is a super hot market, it'll move. But again, if you need a mortgage to get into your next home, that's what it's
I should point out, and I've been looking through the data since this number came out, there's a pretty distinct variation. We've seen this for the last couple of months, pretty distinct variation when you look at a regional level. So, for example, the South, the index level that the National Association of Realtors is citing is a lot higher, at about over 80, whereas you're looking at the West, and you're seeing a level of 54, just as an indicator of the overall pending home sales and the number of contracts that are being signed. And when you kind of look at activity, even these pending home sales, you look at the South actually dropping here, but the West sort of seeing some recovery in some of these other regions, just seeing a little bit touch more recovery, even though they're the weaker markets.
All right, Simone Foxman from Bloomberg, thank you so much for joining us. Of course, a lot of what happens in the housing market and mortgage rates is going to be dependent on what the Federal Reserve decides to do next year. So let's get more on the outlook for 2024. Joining us now, I'm pleased to say, is Kathy Entwistle. She is Morgan Stanley Managing Director. So Kathy, we've clearly potentially cutting big next year. Do you think the market is ahead of itself, or is it right on?
Well, I think that there is a lot of anticipation with these Fed rate cuts. But what I want to tell everybody first is we've got to look at 2023 and finish up strong before we enter into 2024. There's just a few trading hours left in the calendar year, and if you haven't cleaned up your portfolio yet, it's not too late. I want clients to look at their portfolio and map, like optimize their portfolio going into 24, and that includes also mitigating any taxes with tax harvest loss day, like a harvest.
See, that's what I'm talking about. A lot of people are moving their portfolios around and they're selling. That's how I'm catching these dumps.
Take care of tax impact, and then you'll be ready to move on to 2024, and we can
Taking profits off for tax purposes. That's what's going on. That's why we're having these dumps
Like this market is set up for a good 2024.
that I've been
I
catching.
said that back in October, and then boy, it seems like we
Let
had
me
this
show you.
2024 performance just in the last couple of months of the year. So, how do you kind of position this market and the opportunities for 2024, given the big fourth quarter we had here in 23?
Absolutely. I heard a lot of talk this morning about different types of asset classes. Cash was a big topic. I want to say, first of all, with cash, yes, there's a lot of cash on the sidelines. A lot of people are parked in that 5% savings rate or thereabouts. And if the Fed does indeed start cutting rates, we're going to see those rates go down too. So the easiest and quickest thing to look at is your cash. If that is long-term money, start thinking about locking in longer-term fixed income rates for the fixed income side of your portfolio. Start thinking about, is it the right time to start legging into the market? But don't forget, you need your emergency fund. And I think that's something that a lot of people didn't have years ago. But now we've had so many different things come up in this world. We need to have that cash on the sidelines. So just the cash that you need in your emergency fund, leave in those shorter-term liquid type investments, and know that you're not going to get those higher rates for the longer term. But you do have the cash there to give you like confidence if something goes wrong.
See, that's one.
We want you to, like, yes, Magnificent Seven did great last year. It really propelled the market up. But there's 493 other stocks in this market, in the S&P side of the market, that are
That's
lower,
two
in terms of valuation
every day.
than
See?
those companies. So we're looking for companies with strong
And a little small one
balance sheets,
yesterday,
healthy cash
but they
flows,
taking
and
profits.
attractive valuations. And we're also looking at companies
That's what
in
she's
the
talking
mid-
about.
Mid-size, small-size, international
Big
markets.
boys taking profits, moving portfolio around.
So you want the equities, you want the
Even
cash,
the ones that are red, they're selling them
So we have a
to
long-term view, and we also want to
make their
remember
taxes way
that
out,
even though every day
certain
we
type of
have
way.
news that is not just new, but it's also big. We have to focus on
But after the first, they're gonna start buying
to
again.
keep our portfolio working for us in the long term.
Well, when we think about those fundamentals and what the economy is going to look like, when you say that you do want to have some more defensives, you don't expect that tech necessarily is going to be able to outperform. Maybe there'll be more breadth in that market or in these markets. What kind of landing are you assuming that we have, Kathy, when you're making these portfolio allocation decisions?
Well, a few things I think about. In the short term, I don't want to forget that January is typically a good month in an election year, and we do have an election year coming up next year. But we also have some headwinds, like we have some issues.
Yeah, see, that's another thing. It's election year next year.
It is an election year. We do have regulatory issues coming out. We do have a big Fed balance sheet. There can be discussions on tax rates. So we want to think about, for high net worth clients that pay a lot of taxes, in your taxable accounts, we want municipal bonds. That tax-free income is going to be more valuable if tax rates do go up. We certainly like corporates in retirement accounts where the tax is not an issue. I did hear a little bit about high yields earlier on, and I do like to avoid high yields, especially in difficult economic environments, because typically the companies with the highest rates on their bonds are the ones in the most trouble, so most likely to default. So I'd like to stay away from the high yields at this point as well.
That's kind of where I wanted to go, Kathy. In the fixed income space, 2022 was just a disaster for everybody. There was no place to hide. That really called into question the 60-40 portfolio. But I guess the bonds had bounced back here in 23. I'm seeing kind of mid-single digit returns. So I'm just wondering, how much risk do I take in my bond portfolio in 2024? Again, you were just mentioning
ask that question because high yield is the best performing asset class, but if they get into trouble, they can also be the ones who default. And having a background in fixed income many years ago, I am very cognizant of the fact that high yield can get into trouble in challenging economic times. So with the higher interest rates, where they are, even if they're coming down, depending on when companies
Look
are
like
rolling over
AMD
their
is the
debt,
play.
they might be in for having to pay a little bit higher than they were used to, even with rates coming down somewhat. And that can cause trouble for their balance sheets and their overall, financial health outlook.
Well, when we think about if rates are going to come down, I wonder how much of what we have seen in the markets, the idea that we've seen a pretty massive rally, as Paul was talking about, the NASDAQ 100 is up 55%. We're going to see probably the best year since 1999. And as a result, financial conditions are looser than they were. And I just wonder if this market could potentially become self-defeating because it keeps conditions too easy, then the Fed needs to actually finish the job.
Yeah, I think too, a lot of times when we think about the markets, and especially the stock market, we think about perception and expectations. And a lot of times you have to get ahead of the expectations of what's coming, because that's when the market moves really happen. So this big market move
Alright,
that
I
we've
think
had
I'm
in
about
this
to
last
put my
quarter
first position
has
on this
definitely been attributed to
AMD.
the Fed coming out and thinking about
I'm gonna get
Fed rate cuts,
one
and
contract.
that would drive the market higher.
It's going to be
I do think a lot of
$150.
that is baked in, but
Dollar.
also a lot of the
Today's
companies that have done
expiration
well are just,
on
very
the
limited
call
amount of
side,
companies.
which
So
is
there's
up.
still opportunities, you just have to be
I'm going to wait for this little pullback a little bit, then I'm gonna pull the trigger.
When it comes to this type of market.
Hey Kathy, just a real quick 30 seconds. If somebody, one of your clients calls up and says, I want exposure to crypto, what do you tell them?
Well, that one's a little trickier. It's definitely very tricky when you look at where those prices were just a few months ago and where they are today. But for now, I like to just say like that is like your play money. It's something that you want to think about separately. I am not managing crypto for clients. I am managing assets that are, in my mind, long-term quality, translucent, or being able to see what's behind it.
Yep. All right, Kathy, thank you so much for joining us. Kathy Entwistle, Morgan Stanley Managing Director, joining us.
148.29 is the high of the day.
Big fan of Ridgewood, a great town. Love Ridgewood. I kind of feel like, I think it's a valid concern, Kaylee. I mean, did we take some of the 24 return opportunity? Yeah, and pull it forward here into the end of this fourth quarter here.
Well,
I'm
we know
hoping
that
I can
the
get a
market is a
pullback back to the
mechanism, right? And
9
so the
EMA,
market has anticipated all of
which
these
is
rate
that
cuts to come
purple
in
line.
2024. So then what happens when we actually get the rate cuts?
Yes.
Can it keep going?
Buy the rumor, sell the news. I don't know. You're just Kathy from Morgan Stanley. Again, not much interest in crypto, but you know what's interesting in crypto? Kathy Wood,
Yeah, that's
CEO
right.
of ARK Investment. We're gonna have some discussion with Kathy Wood coming up in just a moment on crypto. The ARK folks have made some changes to how they invest and how they have exposure to the crypto space. So we'll get the latest there. S&P 500, that's up 0.1%. We'll take it. This is Bloomberg.
Moves pushing. $148 is running. New all-time, new high today. 148.37. Yeah, I was looking for the pullback back to the purple line around the 147.50 area. But,
Stay right here. I'm Pretty Gupta. Listen to the stories that set your agenda.
Taking you from the U.S. market's close
A lot of this was priced into the U.S. session.
to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's
Bloomberg's radio studio at our headquarters here in New York City. I'm Kaylee Lyons alongside Paul Sweeney. We are simulcast on both Bloomberg Radio and Bloomberg Television in this holiday week. And Paul and I were just discussing crypto. Maybe if you're a portfolio manager or someone who advises people on how to manage their money, you won't necessarily be buying Bitcoin or a believer in crypto, but there are those out there who are. One of them being Kathy Wood of ARK Invest. And Bloomberg actually reporting today that there's been a little bit of a shakeup in terms of Kathy Wood's ETFs and its Bitcoin related holdings. The ARK Next Generation ETF, Internet ETF, sold all of its shares of Grayscale Investment Trust and bought 4.3 million shares of the ProShares Bitcoin Strategy ETF. And very lucky for Bloomberg, Kathy Wood joined us earlier today. Here's a little bit of the conversation about the move.
We're as optimistic
Looking
about
for the move back to the all-time high.
Bitcoin as we ever have been.
To the high today, I
But
mean.
there are a few regulatory and tax uncertainties, and we had been waiting for the discount between GBTC and NAV to narrow. It was as high as 50% at one point last year when there was great uncertainty around all of the turmoil in crypto generally, and now it's single digit. And there are now other products out there that we can use to gain exposure to Bitcoin in this moment, and it's just a moment of uncertainty between now, we think, and January 8th to 10th, somewhere in that range perhaps, but we, out of an abundance of caution, didn't want to take any risk.
And I mean, let's get a little bit specific here because we're talking about the ARK Next Generation Internet ETF. The ticker there is ARKW, and I think what caught a lot of people's attentions is that you completely sold down your remaining stake of the Grayscale Bitcoin Trust. Instead, on the same day, you bought into the ProShares Bitcoin Strategy ETF. Of course, that tracks Bitcoin futures. It doesn't actually hold the physical Bitcoin. Can you explain that shuffle? What was the thinking there?
Sure. A couple of things. First of all, BITO, the ProShares, is already approved. There's no regulatory uncertainty having to do with it. So we chose to maintain our exposure through BITO for the time being. And as I mentioned before, there are some tax and regulatory uncertainties still as part of this process. We don't know exactly who's going to be approved and whether they've met all the criteria that the SEC has put before us. We know we have, but we don't know if others, including GBTC, have. We just don't know. So again, out of an abundance of caution, and GBT's discount, again, it was as much as 50% relative to NAV. So not only have we enjoyed this year the run in Bitcoin itself, but we've had the nice closing of that discount. So it's been, double good news for us.
But you've talked about January 10th, Kathy, I think in another report. Is that possible, whether it's you or somebody else, in terms of the first spot Bitcoin ETF actually getting approval?
Currently up 2%.
The probabilities have gone up because the
I don't like it with this
SEC
movement.
has
Come on,
been
got to push right here. I'm gonna get out.
compared
5%.
to what was happening before. Before it was
You got to
just
push right here. I'm gonna get out with a 5% gain.
and we just
Take profits quickly. It's pushing. It's pushing. Up 7% right now. It's pushing.
So here we are. We think
Come on.
we're
If it
first
don't
in
push
line.
right here, I'm
That's
out.
why there is this January
9%.
deadline.
Come on,
But
push.
we like the idea
Push.
that the SEC has been so engaged.
Push.
And it's not just with
I'm up
us, it's others
10%.
as well. We think
I'm in on the call side on AMD. Currently up
funds will be
11%.
approved at the same time.
Come on,
And
push,
they've
push. Looking to crack it. Looking to break that 148.37 for high today. Come on, push, 12%. I'ma take it. Boom, up 12%. See, real quick. Real quick. I was looking for the break of the 148.37, but I didn't see it. Take profits quickly.
So we want to make that clear as well. This is the SEC.
Take profits quickly.
We never know what might happen along the way.
Boom. Just like that.
Kathy Wood, the CEO of ARK Investment, speaking with Bloomberg earlier today. They are making some moves in the crypto space, still long.
I know the stock sniper, why you didn't go for the put contract when it hit high today. This is why, because I did not want to get caught up. I waited for the pullback down to my area, which was the 20 EMA. Once it hit that 20 EMA and I see it was right along that 20 EMA, I pulled the trigger. 12%. Let's go. Now look, it's probably going to break the high today now. Look. That's fine though. You got to take profits when you have them. Who say the stock market ain't predictable? Boom. You got to know your charts. You got to know your setups. You got to know what to look for. You got to study these plays. Now look. Now it's going to break the 148.37 for the high today. Look, new high today. See? Told you.
Just about everything that you use today, whether it's electric vehicles, whether it's
look. But I ain't tripping. I ain't tripping, you know what I'm saying?
Literally in the news.
Green is green.
Derived from what semiconductors do. And what he has done this year, 2021, is actually
green is green.
The best portfolio of semiconductor companies by quite a considerable margin. He beat number 2 by percentage points. So here he is again, and he's quite optimistic actually about semiconductors. One of the surprises about his recent performance is that there's a common perception that semiconductors themselves can't possibly retain their value. That, you know, once they're out, they appreciate, like used cars do. But that's not really
Look.
true. They have actually become more valuable. And
New
that's
high
because
today,
the
148.50.
is really a semiconductor.
I called it.
Well, you talked about how he beat the number 2 fund by 5.3.
Rewind the tape. I called it on that pullback.
Some skies and scope here. This
I
is
was
the
hoping that it was going to pull back to this purple line, but once I seen this up in here and it hit the that 20 EMA, see I don't have the 20 EMA on this computer, but on the computer that I'm watching, I got the 20 EMA. It's like right around here. Another indicator. Once I seen it riding that 20 EMA and seeing that it was going with the 20 EMA, I pulled the trigger. Which my stop loss would have been if it would have went up under the 20. But it didn't do it. It just rose to 20 on up. Look, new high today, 148.73. But then still remember, I still got a contract with AMD that I'm holding till February. So I'm still green. You know, see, that's the thing about this stock market, man. If you know it and you understand, now don't get me wrong, it's hard work learning these charts. But if you gotta love to do this. And guess what? I love to do it. I love it, man. It might took a couple of years, but look, now I'm reaping the benefits. And while I'm talking to you, I still got an AMD contract that's going along with this uptrend. Hello.
And what I find interesting is,
and guess what? I'm not going to be greedy. I hit my 1 day trade for today. I know what's going on towards the end of the year. Now, the only way I will pull another trade on a day is if the market start dumping, like I've been talking about the last 3 or 4 days. The big boys been taking profits. That's the only way I will get in again. Until then, I'm on my hands. Doing all this on the Webull app. And then when I get off this computer and I burn off for going by my day, I got my phone. That's the lovely thing about the Webull app.
We can see exactly what he's been doing all through the year.
Well, it's a fascinating column. You can find it on the Bloomberg Terminal and online. America's top
It's really
stock
easy.
picker sees the beauty in chips by our very own Matt Winkler, Bloomberg's editor-in-chief emeritus. Thank you very much for joining us, Matt. We appreciate it. Coming up, we're going to take a wider view
Look,
beyond chips to
high
broader
today. Let's
macro
see what I'm
economics.
up on my
Economist
other
Veronica Clark
plays.
is joining us in just a few minutes. This is Bloomberg.
Let's see. I'm up 60%. And I'm sitting there talking. I got in on that dump and I'm just riding it on up. I'm up 60%. Which I said that I was gonna take profits on that at 100%. 100% profit on that play, not even 24 hours. What are people that say that day trading is gambling? I used to be one of them, but hey, I found my craft, I studied, I watched charts, and I know exactly how to play. All I gotta do is manage my emotions, that's it. I can't wait till I learn how to do this technical part where I can show my trade live on this screen right here. So I can show you when I pull the trigger, you're gonna see my P&L and everything. But I'm not the tech guy at the moment. So, but at the beginning of January, I'm gonna have all this taken care of. And I will be showing my trades live on the screen. Now look, 149. We sub to hit 150. Could I call it 150?
Back in 1997, I was interested in the following question, which is there are a bunch of the dinosaurs called sauropod dinosaurs, which have really long, skinny necks. So Apatosaurus is an example. They also have really long, skinny tails. So I made a computer model.
My AMD call is up 70% right now, the one that I'm just holding on to. Now I just got through trading AMD on a day trade, right? I caught this dump right here and rolled it up to about right here, and then I took profits. If I'd have held, I'd probably be up 100%, 200% on that alone. But I took my profits, you know?
Was to impress the females by making loud moves.
But I got AMD in my back pocket on the call contract that I'm holding on the swing. So I'm catching this anyway, and I ain't even doing anything. I'm up 71% on that, on my swing trade with AMD. I'm up 71% on that, and it's steady running. Man, the stock market is the truth, but you gotta know what you're doing. And it takes time to learn all this. You gotta wanna learn this. Don't get me wrong, it wasn't always like this, you know, but I stuck with it and I didn't quit.
As a newly minted MBA, I would seriously consider private credit because those people are just getting amazing amounts of capital. And we had the opportunity to speak with Apollo's CEO, Mark Rowan.
And basically my day is over. I'm done on the day unless I catch the drop. Otherwise, I'm just watching.
We've had a sea change, not just
You know,
over a year, we've had it over
entertainment
50 years.
purposes only
So
at
much
this
of our
point.
public markets are indexed and correlated. 80% of volume S&P 500, 60% of the market ETFs, 100% of our returns this year are
Now we
from
got a
10
little
stocks,
pullback,
constitute 35% of the
which I
S&P,
can take a
and
put
traded at an average
contract
PE of 50.
that is
How many
gonna go
of us come
down,
every day looking to buy
but I
50
don't want to do
stocks?
that.
Not many. And I guess what I'm suggesting to
You
you
know,
is that if you, public markets are so
I can take a put contract right now.
index to interest rates and to money flows.
I could have
that if you actually want
took a
alpha,
put contract at 149.49 and rolled it right back down a little bit.
Because we're also revisiting the notion of public being safe and private being risky. This is the framework we used to be in.
That's what I
Private
could
venture
have.
capital, hedge funds, private equity. Now it just means less liquid.
Now I'm just watching.
Be a risk in your mind? Liquidity? Liquidity is a risk to everyone, but in different degrees. So if you are a
And look at that purple line, that 9 EMA. If you've been watching, that's what I've been talking about the last few days, that 9 EMA. Steady going up. The VWAP, which is that yellow line, is starting to flatten out, but it's going up.
They should get paid for illiquidity. And we're seeing that in the performance data. If you look at the active management has failed to beat the index 85% of the time for 20 years. And I think it's going to get harder, not easier, to beat the index as more and more.
And at 149, 49, that's an even, that's an odd number on the high of the day. And as watching, it never ends on an odd number. So in other words, it's gonna push that 149.49.
I'll give you Drexel, I'll give you Lehman Brothers, I'll give you Bear Stearns, I'll give you SVB, I'll give you First Republic. The financial institutions tend to die of one of two causes: heart attack or cancer. Heart attack is funding risk. They borrow short and they lend long. Cancer is the slow addition of poor quality assets which over time undermine the system. So you look at all of those firms, all of those had an element of both heart attack and cancer. Funding risk as well as asset risk. You look at
like, share, subscribe to the channel.
Borrow long and lend long. Everything is matched.
But yeah, man, you gotta find your craft on what you love to do. It might not be this, but
we are ideally situated
you gotta
to take
love
advantage of less liquid assets.
what you do.
We've structured ourselves that way. And then
that's the
you
only
look
way
at the
you're gonna get
totality of
better.
what we do. Equity is a risk business. Equities go up and
It
down
took me
every day.
years
You
to
can lose
learn how
money
to
in
do
public
this.
equity. You can lose money
But
in
I
private
love
equity.
reading charts.
In the credit business, the vast majority of what we do is private investment grade.
When I look at the risks out there and it translated into nursing Taleb all the way we did in quant with Black Swan.
If it wasn't a camera, I'd still be right here doing this.
I mean, are you hedged perfectly?
And then when I leave, that's what I love about the Webull app. When I leave, I can steady watch the charts and watch the market while I'm out and about.
I think private equity is a risk-taking activity, but each of the companies, each of the situations is idiosyncratic onto itself. And over time, private equity has proven to be a very good asset class, recognizing that in certain markets you will lose money.
Well, that was the Apollo CEO, Mark Rowan, in conversation earlier this month with our very own Tom Keene and Jonathan Farrow, talking there about potential tail risks. And we have to think about risks that could lie ahead for the economy in 2024 or not. Of course, earlier on this year, we were talking, Paul, about the odds of recession.
Everybody should be
Everyone thought one might be
investing,
coming, and now increasingly the conversation is one around a soft
which is
landing.
different
So on
than
that note,
day
we want to bring
trading.
in now Veronica Clark. She is an
Investing.
economist over at
Like
Citigroup.
buying
So
shares of a
Veronica,
company
feels
and
like
holding.
everybody is feeling very optimistic right now. The
I
landing
do
will
that
be
too,
soft.
but
The
that's
Fed
a
is going to
separate.
cut, not
I
because things
use
are going
TD
wrong, but because
Ameritrade
inflation is just
Charles
doing
Schwab for
what
that.
it needs to do. Is there too much
This
optimism
is
here,
like the small
or do you
account
think we're
challenge that
actually
I'm doing
in the clear?
with the Webull, with the Webull app.
Rhetoric in the last month or so has been
Look,
a big part of that, of course.
like I told you, that's what I noticed about watching these stocks. When they go to those daily highs, they don't end on an odd number.
Maybe those risks have gone down. But I would caution that a soft landing does need to have that 2% inflation element to it. And we have had a stretch of inflation data that have been more favorable, but it doesn't necessarily look like it will stay that way.
So, I mean, that's kind of where I want to go with this inflation
I just called it.
discussion. Quite frankly, I never knew where that 2% number comes from.
Hope somebody
What's
took
wrong with 3%?
a position.
Basically, if we kind of hovered 2.5 to 3%. Talk to us about how
Just
you
called
think the Fed really thinks about inflation.
That comes from hours and hours and hours of just watching. That's what I'm saying. You don't have to always trade. You know, this is not a get-rich-quick scheme. This is a skill to have in the toolbox. I just called it. How did you know that, Sniper? I knew that because I watched these charts. And I know from watching day after day, month after month, year after year, I know that the market, once it hits a high, it wants it to be an even number, not an odd number. And I know that.
Scenario as well, but is there real risk that inflation could come back when you're looking at what's happening, say, in the Red Sea and the potential disruptions to supply chains, which very much is a good-oriented kind of inflation?
Yeah, absolutely. And we're watching those renewed supply disruption kind of issues again. Transportation costs coming up
And see, the thing about these contracts, you can use less money to maximize your profits. You know, like now, I got 3 option plays that I'm just sitting on in the portfolio, and I'm just sitting back. And when I go on about my day, it's making money for me. I'm up 73% on my AMD call.
Yeah, no, I think people have been trying to poke holes in some of the labor market data for a while.
Man, 75%.
Overwhelmingly strong, and I think that's the most important takeaway.
And guess what I'm gonna do?
Strong labor market.
What you gonna do with your profits, Sniper? I'm gonna build this Webull portfolio. Just like I'm building my TD Ameritrade portfolio, I'm finna build this one. But see, last time I was supposed to show y'all step by step. If you go back to my videos last year, or I think it might have been like a year and a half ago, I was gonna show y'all how to build a portfolio from scratch. But I didn't do it, you know. I didn't do it. But this time I'm doing it. And as soon as I figure out how to load this small account from Webull, I'm gonna do that. I'm gonna show my account, my P&L on this. So I'm just gonna I'm gonna build this account. Wow, off my profits, I'm gonna buy more shares. I'm gonna buy more contracts to build more, and I'm gonna day trade during the day. But see, the last time I didn't basically day trade I didn't day trade like this to build the other portfolio. What I did was I just worked and I just put money to the side and kept on buying, I basically used it as a savings account. I just kept on stuffing. Whatever money I make on the market, I stuff it. Whatever money I make on the market, I stuff it, you know. But this Webull platform, I like it a little bit better than the TD Ameritrade platform. The TD Ameritrade platform, which is Charles Schwab now, it's a little bit more difficult. You know what I'm saying? It's a little bit more advanced. But the Webull, anybody that's just starting that have a love for this can learn, practice, get going. It's a lot. It's easier to work with. But I would recommend everybody to open up a TD Ameritrade account, which is Charles Schwab now, and use that as your long-term hold. Use that for your investments, you know, like that. And use the Webull app as your day trade, you know, and your swing trade and your contracts. Because the TD Ameritrade app is more advanced, and the app is not as good as the Webull app. Put it like that. I like Webull.
Obviously, we've had this large loosening of financial conditions, from the Fed since, it may well be that we delay a recession for this year.
And I'm gonna take the profit and I'm gonna buy more Amazon. I'm gonna buy more Facebook. I'm gonna buy more Google. I'm gonna buy more Tesla. I'm gonna buy more Nvidia. You know, that's what this is all about. I'm gonna buy more Old Realty, which is a real estate company that pay monthly dividends. I'm gonna buy more of that. That's all I'm gonna do. I'm just feed the machine. My motto: make money, spend less, invest. That's what it is. And then go out, use Amazon Flex, use DoorDash, use Uber to make extra income and feed that into the machine. That's all it is.
How concerned are you as you think about the U.S. economy, which is, as we've kind of been discussing, in pretty solid shape? How concerned are you about the rest of the world?
And build.
Weaker than the U.S., particularly like in a stalwart.
Spend less, invest, less stress.
Recovery and reopening hasn't been as robust as people would have liked, and they still have their issues.
Hit the like button and subscribe to the channel. I'm giving game right now, man. And share this. You might not like watching charts all day long, but you still should be investing. You can do you can, like what I'm doing on my
That is turning, more dominant
swing
and
contracts.
supporting US
You can do
activity.
that with the
Probably
Webull
having
app and still work a 9 to 5.
For the rest of the world, coming out of maybe some of the speaker episode.
I just had
Real
a
simple.
viewer writing in here, a viewer/listener, because we are on both TV and radio today, so I'm not sure how this person is joining
My
us. But wondering
AMD
how you feel about
contract
productivity
now
figures that we're seeing.
is up 82%.
Yeah, productivity is a really difficult thing to measure. We had this period where productivity was weak coming out of the pandemic, and now we've had back here really strong measured productivity growth, and we're kind of back on the pre-pandemic trend now, because we always measure productivity.
Hit the like button,
as
subscribe to the
residual,
channel.
Looking at how much has been produced, GDP growth versus employment, and we're basically thinking there hasn't been a big shift in overall trends of productivity, and that means that productivity growth is still running around 1% annualized or so. It is definitely important when we're thinking about productivity and what that means for how wages will translate to inflation. Wage growth that seems stuck around 4 to 5%, and with 1% productivity growth, that's more consistent with 3 to 4% underlying inflation still.
Hey Veronica, thank you so much. We really appreciate it. Veronica Clark, she is an
See what the
economist
SPY
over
doing.
at the
We already know what
Bloomberg
AMD doing.
City Group, giving us her economic thoughts. They still have a recession potentially in 2020.
It's flat.
All right, guys, we flipped the calendar, Kaylee, to next year. Boom, election year. And
Yeah, don't I know it.
You are all going to be all over that. We're going to be seeing you from Iowa, I'm sure, and some other far-flung locales. We're going to check in next hour with Henrietta Trez. She's at Veda Partners. She's a managing partner, director of economic policy. We're going to get her thoughts on politics in 2024. Because if you didn't have enough cross currents to navigate for this market, now in 2024 you've got politics.
Yeah, it's going to be a doozy, of course. You have presidential politics with a race that looks like, at least at this point, it's going to be a rematch between Trump and Biden. What does that mean for financial markets? But you also have to pay attention to Congress, Paul, because in January, when we come back, it's not just Iowa and the first real contest in the Republican primary. It's also a deadline to avoid a government shutdown. And to this point, they haven't proven very good at, compromising on fiscal matters over there on Capitol Hill.
Exactly, that's going to be a challenge. Certainly starting in the House, but a lot of work has to get done when our good friends down in Washington get back to town and get back to work. S&P 500 up 0.2%, NASDAQ up almost 0.3%. This is Bloomberg.
Have you thought maybe I should go do something else? I can't do anything better than I'm already doing. I already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups that we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. In this business, I would still say it's like a cold spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
The market's been open
You can see the massive gains.
hour and 15 minutes.
Breakout we have all perhaps long awaited, finally realized. We'll see if it sticks.
The SPY is moving flat.
There's no question it's
AMD is the only one that's really moving. Let's check out NVIDIA.
volumes have surpassed $24 billion.
Well, if you don't know, AMD is a AI company.
Start demonstrating the
Crypto Tuesdays. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday.
AI is really hot.
1 p.m. Eastern. Bloomberg celebrating inclusion.
See, that's another thing. If you're really high on NVIDIA, well, NVIDIA is an AI stock too. If you're really high on AI, you can jump in on these companies and become an owner, like AMD, the company that I'm talking about, AMD. It's an AI company, and what you can do is you can start stockpiling these stocks. AMD, as far as it's only $80 a share. Like, what is it right now?
in New York City,
No,
where I'm
No.
We were called
AMD
because
is
it's not very
$150 a
usually-
share.
Usually I'm down in Washington.
Every
where it's
week
been a
you
crazy
can buy a share
2023,
of
but that's
AMD.
probably nothing
150, 150, 150, 150, and just keep building. You know, keep building.
That's going to start in earnest in January in the Iowa caucuses and Congress.
If you high on AI,
Washington in a couple weeks to try to sort out fiscal matters, a budget, and how to avoid a government shutdown. So we want to get more on all of this with Henrietta Trey. She is Veda Partners
artificial intelligence company.
managing partner and director of economic policy. So Henrietta, maybe let's just
It's
begin.
the hottest things going right now. Look at NVIDIA, another artificial intelligence company. It's running. These are some hot companies from 2023. And guess what? Coming into 2024, it's still going to be hot. AI is the thing. I might pull it. Nah, I'm going to stick to my plan. See, the greedy part of me was trying to tell me to trade NVIDIA because I see it's going up. No. That's called emotions. Just watching, but giving you ideas, you know what I'm saying? Because the purpose is to give some type of knowledge and value for the people that's watching. Because I appreciate you coming to the channel. All I need to ask you to do is hit the like button and subscribe to the channel. And share it. Valuable information. But everybody should be stockpiled. Instead of just holding your money into some kind of bank account. Stockpile, become owner of these companies. Long term, hold 10 years, 15 years. Use it as a savings account. A lot of these companies you use every single day. YouTube, which is what I'm on right now, which is owned by Google. Apple, if you got an Apple phone. What else? Amazon. Amazon got a lot of things coming up in the future. I'm contracted with Amazon to deliver packages, so I know the ins and outs of what's going on over there. Amazon, which we use all the time. Even DoorDash and Uber, we use them all the time. I'm also contracted with them. I know what's going on with them, their company, and I own shares of that company. It's just all the things that we know, like, and trust. Levi's, whatever. Jordans, Nike, whatever. Tequila, you like to drink tequila. You know, they got companies on the stock market. Cool cigarettes, whatever you think, whatever you like. Start owning some of these companies. You know? Coin, which is Coinbase. It's a whole nother topic. You're talking about crypto, coin, which is owned by Coinbase. Which is Coinbase, which is a crypto brokerage. A lot of y'all probably know about Coinbase. Well, it's on the stock market. And it's been running because of all the rumors and stuff was going on. Netflix. We all got Netflix. But the thing is, you gotta buy these companies and look at it as a business owner. You don't look at it like it's a stock because you really own part of the business. However many shares you are a business owner. You own a piece of the company. If you own one share, it might be a small percentage of the company, but you own a piece of that company. You are a business owner. And that's how you gotta look at it. And in the beginning, if you're trying to save, everything need to go into the brokerage account. I'm not a financial advisor. I'm not licensed to be a financial advisor at all. But that's entertainment purposes only. But that's what I do. That's what I did. You can You can just imagine how easily it is to build a brokerage account to stack some of these companies and become a business owner of some of these companies.
I hope he can make it through April.
Levi's, I wear Levi's. I got stocks in Levi's. I go into Macy's. At Macy's, I own a couple of. I own some shares of Macy's that was given to me for free for signing up to Webull. That's another thing. If you want to get some free stocks on Webull, click my link. Well, I haven't even put the link up, but comment in the comment section, and I send you the link where you can sign up for Webull. You'll get free shares of stock. You'll get free shares, and I got free shares, and I'll get free shares. That's how I got my Levi's and my Macy's. I go into Macy's, look around. I got a video about that. Check on the YouTube channel. When I went into Macy's a few years ago, and I went into Macy's and I just looked around, see the customer service. You know, you got to know your company, who you buying into. Chipotle is a good one. If you like to eat Chipotle, they stocks are expensive. I don't own those Chipotle, but that's a good company. I mean, just, you know, the companies you know, like, and trust. But we all like Apple. We all like Facebook, Instagram. If you ain't on, if you are not on Facebook and you on Instagram, well, Facebook owns Instagram. You know, why not own a share? Why not buy a share of Facebook every week, every month, whatever? You look at Amazon, you look at Netflix. Why not own some shares of Netflix? Why not? Stop buying cigarettes all the time. Stop buying alcohol. Quit going to the club for a year, 6 months. And use the money that you're going to spend at the club, use the money you're going to spend on alcohol and beer and drinks or weed, whatever. And then put that money into the stock market and see what it look like a year from now. You'll be amazed. Especially with this Webull app. You just buy your shares right from the Webull app and keep it on going. Put up $100 a week, whatever. I ain't going to the club this weekend. I'm not going to buy no Jordan this weekend. I'm not going to buy no liquor this weekend. I'm going to put that money in the market. That's another thing. Webull, you can buy fractional shares like AMD, or even Nvidia that's on the screen right now, which is an AI company. It's $497. If you can't afford the whole share, Webull got it where you can buy fractional shares. You can buy $10 worth in Nvidia. You know, that's another thing about Webull. You can buy fractional shares. You don't have enough. You like Nvidia? You don't have enough money to buy the 500 or whatever it is. Well, it's coming up on 500. You don't have enough money for that? Buy $50 fractional share and build your shares up like that. Start small. You don't have to be. It could be $5. I think the less amount you can buy on a fractional share on Webull is $5. You just got to start somewhere. I don't care where you work at or what. You got to start somewhere. If you only do $20 a week. See, that's that dump I was talking about. If you can, well, it's kind of early for that. But you can start with $20 a month, whatever you can start with. But you should be investing. That's the point. To get into the habit of investing. Well, it's about to be 10 o'clock. I'm about to end this stream. I'm going by my day.
He's going to join us and talk about the fixed income markets.
gonna sit here and watch though, because I know that long drop that I've been talking about, it's kind of early for that.
There's several cameras that look out at your
But
world,
then maybe
mapping your physical
that
world so we can put the content in there.
tomorrow's Friday. A lot of people don't trade on Fridays.
So we know where you're looking in your
And
physical
Friday's
world.
basically the last day.
That's a lot of data. That's a lot of very
So
personal
maybe
data.
that was the
There's a
set
number of
off.
other sensors on the device that are needed to make it work in the way it does. So we feel
Well,
strongly
I think I missed it running my mouth.
know what these devices can do. And
But hey, I hope somebody called it. If you was watching, had that idea in the back of your head, if you called it, congratulations. I missed it.
now versus letting it out of the bag and trying
And if you caught that dump to ride it back up,
years from now. So who should, what rules would you put in place and who should make up and enforce the rules? I think it's definitely
well, on the 5 minutes you really don't see that dump as much. Let me see. Switch it to the 1 minute chart.
So I actually spend quite a bit of time in DC talking to folks, saying,
There you go.
just educating them on what it can do. But I think
You see how it's sitting on that 9 EMA, that purple line?
there needs to be an understanding that the user needs to understand the level of
See, if I was to pull the trigger right now, you know what I would do? I would give me a put contract that is gonna go down right now, and my stop loss would be if it go above the purple line. See, if I'd have did that, look, I'd be up right now. Stop loss is above the purple line.
Tough challenges, higher living and education costs, and wages that aren't keeping up with
I will be watching. I know I'm up a little bit. It might be 3-4%, but I'll be up right now. Watching. If it go above the purple line, stop loss. Watching. Watching. 10 seconds left on this counter. Watching. See, it's going down a little bit. 5, 4, 3 seconds left on this counter. What is it gonna do? What's gonna next counter will maybe be my decision. Okay, that's the next counter. What is it gonna do? Then I would have a decision to make. Will I go and take my profits right now, or should I stick to the plan, which is to hold and wait and see if it go back above the purple line? If you go see the purple line, it's going down, so that means it's probably going to dump. Hold. I would have to get out right there. I would get out, minimize your risk. Or if I'd have kept holding, whatever. But I would have to get out, like really right there, right around right there. I would have to go and get out, and that would have been a loss. Which, look, it would have been a small loss, though. You know what I'm saying? You got to minimize your losses. Just like you got to take profits, you got to know when to cut it. Because you never know, it might run up. You know what I'm saying? So I would cut it. I'd have took that loss. Even though it might go back down. But hey, I stuck to my plan. You know what I'm saying? So either way it go, if it was a loss or a win, it's still a good trade. You know what I'm saying? Because I stuck to my plan. That's the main thing. You got to stick to your plan if it's a win or if it's a loss. You got to stick to your plan. That's how it works. That would have still been a good trade.
We are live here in our Bloomberg Radio studio. We're simulcasting on Bloomberg Radio and television. How cool
See, that's another thing you gotta do. You gotta do mental trades. You know.
Why not? It's been that kind of quarter, that kind of year. The S&P's up about 0.2%. Same for Nasdaq here, and the Russell kind of off just a little bit. We had seen some widening out there.
And then sometimes, like now, it might dump. It might go on and drop. Man, why did I should have held a little bit longer. No, you don't think like that. You stuck to your trading plan, and that's what it is. You got to live with the results, and you got to train your mind to understand that, hey, that's still a good trade.
Let's check in with Jess Benton. She is our
Because you only took maybe a 3% loss. That's just another thing. That's emotion that you go through. Man, I should have never got it. I should have held. No. Can't think like that.
Well, I want to point out though, if you look at the S&P 500.
Oh shit, I'm finna get in right now. It's going down. It's going down. No. You took the trade. You had the trading plan. trading plan was okay. It's up under the purple line, which is the EMA. If it goes up above the EMA, 3% or whatever, that's my stop loss. If it goes down, okay, I know the hold. But if it goes above what I'm willing to risk, which I always preach over here, 1%, 10%. Hey, sometimes it hits the 1%, and you got to take your losses. Just like you got to take your profits, you got to take your losses. And then sometime, a lot of times, majority of the time, this is what's gonna happen. That's how it works. Call a trading plan. Just like in life, bro, if you make the decision that you make, you know what I'm saying? If you know you make the right decision and it don't come out the right way, you can't be upset about the outcome because you know you did the right thing. Same thing.
Maybe end of first quarter, maybe in the second quarter, time will tell. Maybe the market is a little bit more aggressive.
I did the right thing and I stuck to my plan. And however it's gonna go, that's how it's gonna go. But I did the right thing. If it don't go right, hey, I did the right thing. Just because you do the right thing don't make it. Just because you do the right thing, it does not mean that the turnout is gonna be right. Life don't work like that. Well, I ain't mean to turn this into a, life lesson, but hey, it's true. That's another thing about the stock market and day trading and investing. This stuff goes right along with life. If you can control your emotions on this, can't nothing hold you back. For real. Now, I said I was going to get off at 10 o'clock, but I'm talking a little bit now. I'm in with the flow. But hit the like button, subscribe to the channel, and share. This is a powerful, powerful video about life, the trade, whatever. It all goes together.
Year to date, but it's only up a couple of percent through September. But it's really outperformed here in this fourth quarter. I think that's what the market observers would say is a good thing.
And also small caps.
Yep.
If you look at the Russell 2000, up more than 20% since its low in October. So usually you see those begin to take.
Another example. Let's say that when it hit the red, when the loss was taken on the mental trade. A lot of times you will see it go red. Oh, let me get in on the downside. And then you get in and then it does what it's doing right now. It go back up. So that's what I'm saying. You got to keep your emotions in check. You got to stick to your plan. And of course, sometimes we human. You don't stick to your plan all the time, But as long as you stick to your plan, I think that's why I'm starting to like this live streaming a little bit. You know what I'm saying? Even though I don't know about all the technical stuff, but I'm talking, it's forcing me, because I want to do the best for y'all, it's forcing me to stick to my plan. It's making me a better trader, which my mentor, which I'm going into another conversation now, my mentor who taught me this stuff, told me that. He says that all the time. This live streaming, it makes you want to get, because you don't want to look like you done did something wrong to the people. You know what I'm saying? So it makes you concentrate on your trades. It makes you dial in, because guess what? If I'd have took a bad trade and would have lost 100% or would have lost 50%, it's live. You know what I'm saying? Once I learned how to do this technical stuff and actually put my P&L, my wins and my losses and my actual trade right here on this screen instead of having it over here, it would let everything be known. You know what I'm saying? And then you'll start getting people in the comments, oh, you should have did this, oh, you should have, so it kind of keeps you on your toes. That's what I'm seeing. So I'm starting to like this live streaming day trading. And also I feel like I'm talking to somebody, because a lot of times when you into this kind of stuff, I'm gonna be honest with you, majority of people who you gonna be around, it's not gonna be into this. You know what I'm saying? And you sitting like you talking to, feel like I got somebody, I'm talking to somebody, and hopefully it's somebody that's in this circle of traders, because a lot of times we be alone, because the people who we associate with does not, it's like speaking Chinese, it's like speaking Chinese to them. They don't know about none of this, so that's another good thing that I noticed about this. Now look, another sell-off. Okay, now we see this VWAP. Now I'm supposed to be gone right now, but I'm gonna wrap this up, man. I'm gonna stay about another 10 minutes because I want to see this VWAP crack. That yellow line right there, that's the VWAP. We're coming down to this VWAP area. Now, the only thing is that I'm used to seeing the selling from the big times. I'm used to seeing this toward the end of the day. I'm not used to seeing that this early. So even though, like my plan earlier, remember what I said, the only way I was gonna get back in if I start seeing a sell-off, because I know from watching the last 4 days, the big timers been selling off. For what? Taking profits, tax purposes. It's the end of the year. So, but it's happening earlier than what I anticipated. You know what I'm saying? So I'm just watching. But if it cracks that VWAP, that 496.25, I already got my contracts loaded. See, that's another thing about Webull. I already got my contracts loaded, ready to go, while I'm talking and running my mouth. All I gotta do, if it drops below that 496.25, I'm gonna pull the trigger, right? And my stop loss is gonna be 5% above that line. And once I see it going back above that VWAP line, which is that yellow line, then once I see 5% negative red on this screen over here, I'm gonna get out. Then it might bounce off the VWAP. So I just got it on watch. Which that's what it's doing. It's bouncing off the VWAP. Which the yellow line, if you don't know what the VWAP is, it's the yellow line.
Microsoft is, of course, OpenAI's biggest financial backer, and very tight partnership. Use a lot of OpenAI's tech in there.
And the VWAP is volume weighted average price. That's what the VWAP is, which is the yellow line. That's what VWAP stands for. Volume weighted average price. Now we're back above the EMA, which EMA stands for exponential moving average. These are all indicators, computerized indicators.
Yeah, really, really fascinating. And that's not the only lawsuit that has been making news around the holidays, because of course on Christmas Day it was the deadline for this patent dispute between Apple and Massimo over.
I just think if you had a job from 2 to 10, right, 3 to 11, then you really got an itch to learn how to do this. You can work from 2 to 10, but it's going to take time to learn how to do this. Some people learn faster than others. You can take this Webull app, and if you're really serious about it, it's some tools that I got that I'm willing to just share with you. You know what I'm saying? That help me. And if you got a job from 2 to 10, 3 to 11, whatever, you can work this in. Or you might be a DoorDash driver, Uber Eats driver, Amazon Flex delivery driver. You can work this in. If you learn this, even on not the day trading side, on the swing trade, being a swing trade, swing trading options is a great way to earn income. without really just being in front of the screen all the time like that. But hey, an hour and a half. I pulled my day trade today was one trade, right? I'm done for the day. But I still got 3 positions open right now that I'm swinging. That's working for me while I'm doing whatever I'm doing. I'm basically done for the day. Unless I see that major move that I'm looking for. Basically done. And if I don't see that move by a certain time, hey, I'm going to cut everything off and I'm gone. That's another thing. You got to have a time where you get off. Look, 8:30, I'm good. 9:30, 10 o'clock,
So, I mean, I'm actually surprised just
I'm done.
Apple over the years that they either haven't settled or shared a workaround. I mean, is there any consensus how this might play out?
So, as from our reporting,
A lot of people trade from 15 minutes, 8:30, 8:45, 9 o'clock, they done and they gone about their day.
appease the regulators in the sense it's approved that this is a distinct enough technology from whatever Masimo is a company, the medical
They
device.
took their move in the beginning of the day, whether it was up or down. When around 8:30 wasn't really a move, it took a big up. It went up right here, you know, got in, somebody, you know, they got in, rolled it up, boom, got out, gone. Took a put contract right here, rolled it down, boom, done for the day. Within 15 minutes and gone. The big timers, you know.
They're going to demonstrate that they're willing to fight these patent cases.
A lot of big issues, as there always are in big tech, and Bloomberg's Mark Bergen.
But you can start $50, $100, you know.
Check out his article today is reporting on the New York Times.
Some people might want to just make an extra 50, an extra 75, an extra $100 a day. You know, well, we really don't. That's another thing. You got to get in the habit of percentages. You know, get in the habit of saying percentage. 10% a day, 8% a day, whatever mine is 10% a day. You know, 8%. Sometimes I might take the 8% and just take it high and just let it go. You need 8% a day on your money, 10% a day. It might not be every day. It might be an extra 10% a week. An extra, you know, 10% a week. That's 40% for the month. For most of us, that's a whole nother income. And what I recommend, you take that. You just now starting out to try to build. You take that that money that you made off the trade, reinvest it in the company that you know, like, and trust. With Webull, you can do dollar cost average. Where if you made $20 today, man, take the $20 and put it back into whatever. You can put it back into Nvidia, AMD, Microsoft, Google, Apple, whatever. And just keep building. Boom, 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 boom. After about a year, you'll be amazed on what you have in that trading account. I would say 6 months, 3 months. Try it for 3 months. And you'll be amazed. If you see red, so what? Just keep on feeding it. You ain't doing nothing but dollar cost averaging in. But yeah, I'm watching right here. If it goes below that yellow line, that 496.26, I'm gonna pull me a put contract on the downside. If not, I'm gone. So I'm gonna give it a few more minutes. But I'll come back right around after lunch. Not come back here, but I will go to the phone, and that's what I do. Because I don't sit in front of the computer. Sometimes I will, but I really just don't after around 11, 12 o'clock. Sometimes I will, depending on what's going on, but majority of the time, I go on about my day, do whatever it is that I'm doing. It might be Amazon Flex, it might be DoorDash or Uber or whatever. And
Welcome back to Bloomberg Markets. Kaylee Lyons here.
what I'll do is I use my phone with the Webull app. Because it's very friendly.
We are in the final days
catch it there. So what I'm gonna do, about to get ready to end this, and hey, going by my day, when 12 or 1 o'clock hit, you know,
We started the year at 387, so we are very, very close to being.
and I just start back watching again. It just won't be like this. It'll be on this phone. That's why I'm starting to really love this Webull app. I've been having it for a while, you know, so I'm very knowledgeable about this app, this platform, but I just haven't used it on a consistent basis like I was doing on my main platform is TD Ameritrade, you know, because I've been having it for a very long time, and I just know how to use it, but it is very difficult for somebody that's new. But Webull is super easy, you know, and you can use your phone and platform. But sometimes I might use the TD Ameritrade platform to do the charts because I like how they charts are. But the app is a little, it's a good app, don't get me wrong, but it's a little bit more advanced than this Webull app. This Webull app is super friendly. Somebody can learn how to do this within 30 minutes and buy their first stock just like that. It's very simple and easy.
I like are 402, which is a 200-day moving average, and maybe a little beyond that. When I look at next week, you're going to have 50 billion of corporate issuance. You're going to have the unemployment number on Friday, which is going to be strong. You've got the CPI number the following week, and we expect Fed governors, not Powell, to push back on all these rate cuts. So, you know, there's still a lot of people out there that believe that will only do 3. You know, we look at what the Fed says and we totally ignore it. But nonetheless, you know, and there was an article in the FT today saying central banks don't know how to.
Wait, I'm looking at the look. See, I'm looking at the no. That's the no. I'm supposed to be looking at it in the SPY. I'm looking at the wrong SPY. At the wrong company.
Around January 31st.
Irving Trust. Nice. That is old school.
That was Nvidia that it was on. I was talking about the SPY. Okay. This is what I'm talking about as far as the dumb, you know.
Irving Trust. That's going old school for Andrew. So Andrew, I look at my IN function, Bloomberg Index Browser, and I was surprised. Well, the good news is it's all green for fixed income in 2023 versus the terrible 2022 that there's no place to hide it.
Well, I understand that up until about 2.5 months ago.
See, that's another thing about this live streaming, man.
So I'm surprised to see corporate high yield up 13.5%. Everybody's been talking about
you can get distracted easily. Like just then, I could have made a huge mistake because I had Nvidia on, but I was meaning I got Nvidia on the screen here and I got SPY on the other screen, but I was thinking that I was looking at the SPY over here, so I could have made a huge mistake. Luckily, I caught it, you know. Which is a rookie mistake. That would have been a rookie mistake, like not paying attention and buying. You thinking, okay, I had Nvidia on here watching this chart, but I got what I'm really supposed to be watching is the SPY for the dump. So I'm confused, you know. That's from not used to doing it like this. That's the difficulties of live streaming. You got to pay attention to 3 different things at one time, and my brain is already trained to look one way, you know. But I know I got to be careful, you know.
Well, it's interesting.
And I caught it because I'd have got in on the SPY down here, but then looking at the Nvidia chart over there, which is 2 different companies, 2 different stocks, moving 2 different directions. Well, that's my time. If you watch this throughout the whole stream, I appreciate you. Hope you got a good wealth of knowledge, something to think about. Have your trading plan. Usually I have mine right there, but I've had it there for so long that it's instilled in my brain. But I'm about to get ready. When I get off here, I'm going to erase this and I'm going to put my plan right there to restart all over again. I got my calendar right here, what I used to track, my wins and my losses. You know, over here, if it's a green day or a red day, I need to get back on top of doing that. So, see, that's another thing about Webull. It has a calendar inside of that app. It's a really good app. It's a really good platform. I like it. So, let me go on and end this before I go to talking some more. But, like, share, subscribe to the channel, make a comment. My IG is the Stock Sniper. Hit me up over there if you got any questions or whatever, or just want to chat it up a little bit, chop it up. Long as it's about this, you know, don't be in there with that weird, you know, with that weird shit. I ain't with that. Excuse my language, kids. But this the Stock Sniper. Like, share, subscribe to the channel. I will be going live in the morning. Again, the goal is to do this every single day from here out. I'm going to get this updated, fixed for the end of the year. This is really a test run. But after January, hopefully with the blessings of God, I would have all this situated so I can live stream my wins and my losses right here on the screen so you can see every single thing. That's the goal. So with that being said, the Stock Sniper, to the next video, I'm out. Man, I love my folks.
Immediate and